Good afternoon. This is Chris Brecher. I'm dual, triple broadcasting just so I can embarrass myself in as many places as possible. I'm on YouTube, I'm on Chart Patterns Mastery, and I'm on the live room. I'm going to be answering questions in the live room, not the Chart Patterns Mastery, just to let you know. So, just to let you know what we did today, we salvaged out a profit by watching JP Morgan. So, the thing is that I'm really into companion stocks, especially the ones that have earnings, and what is keying off what. And let me show you what we're talking about. So I was watching the ES on the left. So it's been in a big old bull market. On the right, definitely watching the advanced decline intraday. So the advanced decline was getting nailed. There. So you see on how the ES was going up right here, and the advanced decline was getting nailed. In fact, it wouldn't bounce at all. That doesn't mean to go whole hog short, but that's what I was watching. So what did I do? I did something too early, and I'll show you that in a minute. But look at the AD, and then the key is, what are markets keying off of? So the first thing they started keying off of was JP Morgan. So right here, I did a put fly in the SPX right here. Figured I was wrong, and then I saw JP Morgan start to get nailed and be down. I mean, almost down, getting nailed right here. So keep in mind, that is right here. Look at the bottom, 1016. But look when this started selling off, 1024. So yeah, when I saw this have another leg down, I got out of the original one, got in another one. And that one worked fine. So just to let you know, it's all about just coming out ahead. So here's actually what I did. There you go. Net up 85 bucks. So the first one I bought at 105, sold at 70 cents. Next one I bought at 165, sold at 285. So I realized here that I could be right, but I'm not going to be in both. So I went for the one that was the most bang for the buck. So and like I said, net, what matters is to come out ahead, which is what we did. So, am I right all the time? No. But when I saw that, I knew I was going to be right. And when I see that, does that mean to play JP Morgan? No. It means that you go and you play what gives you a lot of bang for the buck. But it's also because the internals were so bad. So that's why I played the SPX. So got in the SPX too early. Then I saw JP Morgan. And like I said, look at the SPX here. And keep in mind that it hadn't gone down yet while JP Morgan did. This is 10 minutes later. So you might say, why didn't you stay in the first one? Well, exactly why you see the upper left. Because the whole market has been in just a huge bull market. So to me, the way to do it is to take your profits when you can. That's number one. And so the first one, I wasn't going to be in both. Even if I thought I was right, I wasn't going to be in both. The second thing to watch is this, and it's pretty important, I think. You saw this go down while this was getting killed. So I like to show intraday trading so you sort of get a feel of where I'm coming from in here. So just let you know, I'm trying to add the chat. So if I see any questions in the social media one, but I go on this. So I go on this and I go on that. Like you saw, I made money in it. Why did I get out? Because when this had this next sell off here, this went up, not back down. And I'm like, the internals are coming back a little. The other reason is because of this. What are they keying off of? And I can't stress enough that when we play these things, we also are playing the MACD. And I can't stress enough, you can use any oscillator you want. On an ultra short term, I'm usually using a 15 and a 5. And support and resistance. Look at that. Yeah, we got out here. Don't get me wrong. We did not get out at the top. That thing went from 285 to $4, but we got out right near the support. Why aren't we back in? Because of that oversold condition. Now, if I see this start to rally all the way to here, and I see this resume its downtrend on the right, then I'll probably initiate another short. But I don't see the reason at the moment to do it. So I just want to let you know, I don't see the reason at the moment to do it. But yeah, later. But you had to respect this market's in a massive uptrend. And the minute it got oversold on this MACD on a 15-minute chart. So I'm just using, like I said, you could use stochastics. I just use 3, 10, 16 simple. So the 3 moving average, simple, 10 moving average, the difference of them over 16 time frames. That's how you come up with the MACD. So that kept me from re-shorting. I just want to make that clear. So did we do some great trades? Yeah. Did we do a lousy trade? Yeah. I'm not perfect on these, but it comes down to coming out ahead at the end of the day, which is what we did. And what we've done so far, let's just put it that way. So what else am I going to do? Well, at the moment, markets are acting great. Bonds down, advanced decline still down, the Russell getting battered. And guess what? The ES won't go down. So the whole key in that is you just don't have to fight it. What am I going to look for now? I'm going to look for if this works off the oversold on the right. I mean, on the left. Sorry, I was looking to see if anybody was listening. And then I'm going to look for some kind of reversal pattern. As you see, you just don't see one yet. There's one or a little one there. So yeah, you're starting to see one now. I'm telling you, with the bonds on the low and JP Morgan on the low, I'm not buying. Let's just put it this way. I'm not chasing. But I'd like to see some kind of ultra short-term bear flag, which we're not seeing yet. But that's what I'd like to see. When I see the Russell down, the advanced decline down, I'm looking for bearish reversal patterns. That's all I'm doing, looking for bearish reversal patterns. And that's what I'm trying to do. That doesn't mean to short the world. It means I'm looking for reversal patterns. And that's what I'm trying to do. So right now, definitely watching this. Watching that oversold. I just can't stress that enough on that. I'm not going to short at this support. So I really respect support and resistance a lot. So when you're straight up, you gotta, you could buy on the way up as long as you use some kind of moving average. This was just on the close. I mean, that's your reversal pattern, but that's, like I said, that's in the last 5 minutes is a little rough. So right now, when I see this up, but it's still oversold, I'm looking for short-term reversal patterns. And I don't have them yet. Now, if I see this start to futz around, because you're going to see almost every reversal pattern, sure, you've had that sell-off, but it's the line. It's when you get this and you're able to draw some trend line. And as you see, you don't have a trend line to draw yet. And we can always go in later. You do not have to go in now. So I just want to show you what we're looking at in here and how, like I said, the name of the game is to come out ahead if you're day trading, even if you make some mistakes. So that's what we did, is come out ahead. And that's the kind of stuff I do. That's why when I tell everybody I'm working it sort of like dancing in the 70s, that you're trading all day and you're looking for opportunities not to make back your losses, but that if you got in something too early, but then you had the reasons, just get back in. And that's what we did. And now we'll watch to look for something that would tell me I need to get short. So what am I seeing right now? No reversal pattern. Not yet. Advanced decline following the ES. JP Morgan stuff, yeah, they look bad. It looks to me like what would trigger this to have another leg down? Well, number one is if the internals weaken again, like they did on the opening. Number two is if the bond market has another leg down. It seemed like I'm always trying to figure what people are keen off of. So this morning, real early, they were keen off JP Morgan, but they were also keen off the bond market. So when the bond market had that sell off, the market sold off. When the bond market rallied, because it's been rallying lately, the market's rallied. So now I'm not doing a darn thing till I see that advanced decline weekend. And if I miss things, I miss things. That's the way I look at it. That's just the nature of the game if I miss things. So that's what I'm looking at for today. As you see, the advanced decline refuses to go lower now. Still down, don't get me wrong, but it just refuses to go lower. And you got the Tesla refused to go lower and the Google refused to. So I'm probably going to wait till the end of the day. And if I miss this, like I said, I miss it. I'm not going to be perfect on this. Now, going to a 60-minute chart. Does it tell you anything? Yeah, it tells you that this doesn't tell you a thing. It's overbought in an uptrend. It had that little twerk all the way to the support, like you see. And now it's going to spend probably an hour working off that 15-minute. And let me just give you a couple of things in here if you didn't have them. So, in there. So, and UNH, let me get to some of the questions, by the way. So, to sign in, you have to be on Chart Patterns Mastery. So sorry it wasn't scrolling down. I'm sorry about that. Second, big red candle and a big old uptrend. I have a tough time. But let's see. I mean, that's a good question. See, it just in this market, they seem to be forgiving on everything. If I'm going to mess around with PANW, we were talking about it actually on Wednesday, you got to see that bear flag. You got to see that reversal pattern. Now, I just don't see it yet. Now, if I see this up, like 150 and I see this start to die, sure. But I just don't see that yet. On a 4-hour chart, I see exactly what you're talking about. And I think you see that all this is doing is working off the oversold. It looks to me like the ideal is that resistance right where it broke down, which is close. So I want to see either a reversal candle ultra short term or some kind of bear flag. And like you see, you don't see it yet. But yeah, I see exactly what you're talking about. So other thing, UNH. It's a great question. I didn't use that as a tell. Now you might say, well, why, yeah, that's great hindsight. The idea in here is, and this has been working for many, many earnings quarters. The stocks that sell off into earnings, if they open up, you don't fade them because they've already discounted terrible news. And sure enough, UNH went straight up. I took it off my screen because of this. JP Morgan went straight up into earnings and then reversed. So you see on what I'm looking at for earnings coming up. So JP Morgan on its low for the day after rallying, UNH on its high for the day after selling off prior to earnings. Delta rallied into earnings. Yeah, yesterday I took my eye off the ball. It was a great short on the opening yesterday. Now you might say, how about this morning? Well, this morning it opened here. It was already opened down a point. I mean, here. So I didn't touch this. We messed with the SPX instead. So that's what we did in there. It's a great question on that. The moving averages, I'm using what everybody else uses. Well, what the hedge funds use. So I'm using a 9 exponential, 50 simple, 200 simple, and a 20 simple. And then I have my ATR trailing stop. So here, and like I said, other people, even on simpler, have different iterations of this. And heck, whatever works, great. And I go all the time and look at everybody else and try to fit them in there and see if they work better. And sometimes they do, sometimes they don't. They're mainly the same across all of us. It's just little iterations here and there. Here, let me see if I could share this. Let me see. Let me see if I could share a file and give you that actual moving average thingy. There's your moving average thingy. I hope that helps. So, like I said, I am looking for reversal patterns to short things, not to buy things when I see all of these warning signs. So, I mean, that's what I'm looking at, all these warning signs, which, like I said, doesn't mean you have to do anything right now if you don't want to. I'm just telling you that I'm looking for reversal patterns. Now, you might say, well, when this was up 11, why didn't you redo the SPX? Well, I just didn't think I had enough reasons yet. So, yeah, in hindsight, that would have been a good trade in hindsight because that got back to like 240, the one I was showing you. That's 285. Here, let me show you. All right. So here's a butterfly for you. This is betting on the stock going back to 4,500. The problem in this 15 wide is your 4,500 isn't a lot of protection, even two of them for this. It's just not enough of a protection for that high price put. So that's why on the opening after that was a good trade. But we're finding this, and this is a good thing to show you. And I can't show the MACD scans. That's just something that is on the Chart Patterns Mastery. And that's something that's sort of proprietary. It's just about overbought in downtrends or oversold in uptrends. So just keep that in mind. So thanks for sharing that, Taj. I appreciate that. And I'll look at it later. I'm putting it up there to look later. But this is what I want to show you when I trade butterflies or spreads. First, what's my expectation? So when I see all the advanced declines getting nailed, you got to think this is going to go back to unchanged at least once. That's number one. The next thing in here is what do you do with put flies or call flies for the same day? Well, I'll show you a mistake and then I'll show you a good one. So number one, a 5-point wide fly, you never do until the last 15 minutes. Yeah, I did one yesterday. I lost money. Then we did another one and made money. The point is, you can't do a 5-point wide, which means basically betting on the strike price going to that strike too early in the day because you don't know which strike it is yet. So yesterday, right here, yesterday we did the 4505, 4,500 with 45 minutes to go, 65 cents down the drain. Moral of the story, 5-point wide with 50 minutes to go was stupid. Then it was 45.17 with 10 minutes to go. Yeah, then we did the 45.15, 45.10 for 55 cents. Now, like an idiot, I got out at $1.70, but like I said, it's all about coming out ahead. So the one I made $1.15, the one of them I lost 65, you still made 50 cents. So the deal is just to come out ahead every day. But that's one of the rules. 50 minutes left, don't do a 5-point wide. 3 hours left, you can mess around with a 10-point wide. I mean, like at 10 o'clock, but it's not, you don't pay $3. So when you do one of those, you got to look at them like at $1.20 if they're not that far out of the money. And a 15 wide, you never do over $3. They're just, you don't do it. The risk reward isn't there. And I'll show you exactly why. Is this one is $5. This one is $1.30. So this isn't a lot of protection for this. So, just not a lot of protection. So if this stays right here, this is going to wither. That's going to wither away your protection. Now, definitely if this goes to 45.10, yeah, it goes to $5. And that's the point. You don't want to pay $3 if the most it could go to is $5. So now don't get me wrong. I want to do one of these. I want to get back in one of these. Don't get me wrong. But which one would I do? Number one, the way the markets are acting, where they refuse to really go lower, you got to wait till the last minute. You can't do a 5-point wide, like I said. Just can't do a 5-point wide. Just can't even think of it. If you're going to do a 10-point wide, it's got to be, let's say you're betting on it going back to unchanged, which would be 45.10. Then you could look at this one. But I'm telling you right now, yeah, you look on the bottom. I was trying to buy some spreads in PXD, but I didn't get them. There. See that $2? It's too expensive because it's just the risk reward. Even though I think it's going to $4, it would only go to $4 by the last hour. So in the last hour, you could do a 10-point wide betting on direction, but not near $2. You want like $1.40. It's all about risk reward. So that's what I wanted to show you. Now, don't get me, like I said, in hindsight, sure, that could go to $10. No doubt about it. It's just that I have a tough time doing that for $1.85 because if it real quick goes to 45.15, it'll go to 2.30. These are the ones you want to do at $1.30 when it's this close to the strike. Even if I'm bearish, that's how I want to do it. So just want to make that clear how I do it. So now, next thing, you're going to be like, well, how about now? Do you go and short the world now? Well, you see the ES went down and finally the advanced decline did. The only thing against going crazy in the markets on the short side is the oversold. But guess what? It's just not that oversold anymore. Like I said, when I day trade, I use ultra short-term stuff. So ultra short-term stuff. So that means 15 and 5. Yeah, you see the oversold. Then you see that overbought and you're not sure here. You'd ideally like to see that here. But so I didn't do anything else. I just want you to see what I'm doing, that I was looking for reversal patterns. So if you're ultra short term, did you see a reversal pattern? That was a little sloppy. Now, in hindsight, you might say, oh, well, there was a trend line. That's sloppy. You're going to be right, but it's just not as good a tell as it was back here. It's just not as definable. Theoretically, now it could go down by that amount, sure. But I'm just telling you, you're not always going to get that perfect setup. So the RTY already looks awful. I'm not looking at that at all as a long. I'm using that as a tell. So when that refuses to go up, yeah, that makes me think, you gotta look for short. Or let's put it this way, reversal patterns. And when I talk about something working off its oversold bad, that's what I mean. That it worked it off by not going up, like reclaiming 50%. Now, in the long run, I think this is just a blip. in the grand scheme of things, I think this needs to rally. Everything else, like the ES and the NQ, are up in the stratosphere up here. Actually, close to their 2022 highs, believe it or not. So, definitely, I'm looking for that, just not today. Longer term, sure. I'm definitely looking for that and looking for Russell stocks to buy. But when I look at that internal so bad, I don't know if today's the day. So today, advanced decline coming down, and now you could do a paper trade. There's your trend line, but no break. So then it comes down to, if you're playing the NASDAQ, what would be your tell to jump on the white horse to the downside? It would be if the stocks that are the big NASDAQ 100 stocks on this little bounce went down. So let's see. So this is the kind of stuff I'm doing all day for my clients. I'm here all day. All right. So you had that little bounce. What happened? Well, Microsoft's forming a bear flag. Broadcom went down. Tesla went straight up. It's a push. Now, as you see, it hasn't worked. If I saw that on the upper left go all the way back, let's say another 10 points, and all of these fell apart, that's a whole different situation. But you're not seeing that. And you see what I see. Yeah, these are the biggies. They're not, they're sort of keen off JP Morgan in the fact that the ES isn't going crazy on the upside. But on the other hand, they're just not caring about the banks like they did. Now, if these were up 2 or 3, yeah, that would probably be up 15. But right now, when I see the advanced decline lousy, it just seems like the wrong day to mess with the Russell, unless it's a stock you really like long term. And then you look into buying like spreads above the market, like in PXD. There are a lot of stocks I like. I got stopped on all of 30 shares of this earlier. Well, I made the money in the other ones. But here you go. PXD breaking out. And right now, just going to test the breakout. Right in that area. So yeah, I still like that. How about Oxy? Test the breakout is about 59.5. You see, they all got overbought. So I don't see the reversal signals yet. But if I'm right that these are going to kick in gear, I don't have 3 reasons, but if I'm right, then I do long-term call spreads above the at the market or above. Because when it was up here, I was begging for it to go down. And now that it's down, I'm scared to do it. I mean, that's how most traders think. But that's where I'm looking to do something on the upside for longer term. So the problem is you don't have any kind of reversal pattern. So do you just close your eyes and buy it? Well, I'll tell you, on our site, the lowest returns have been where we close our eyes and buy them, unless your time frame is ridiculously long, like GNRC. That we closed our eyes and bought because of hurricane season. Almost every May 11th, it goes up. Guess what? May 11th, if we closed our eyes and bought call flies above the market. It did this, we bought more of them. So that's a bull flag's a bull flag, but this we closed our eyes because it almost goes up every May 11th for years because of hurricane season. Now there's a hurricane, Cat 3, and it went down. Why? It's already had the move I was looking for. So, but those are the things. If I do ultra long, long term, I'll do a PXD. I'll do an Oxy. So, but because in the grand schemes, I think they're going a lot higher. It's just a matter of when. So that's how I look at this. And AK, overbought and oversold. I'm telling you right now, just because something's oversold does not mean it's going up. I use the moving averages, whether it's an hourly, a 4 hour. This is a question from the YouTube streaming. I look at probability. So if it's this overbought on a 4 hour, the probability is if I buy it up here, it's not as good a probability that it's going up. Let's just put it that way. That's the way I look at it. So down here, if it's oversold at support, then I look for reversal candles on the upside. Now, there's another thing, another sort of art to this. We've been using the 4 hour a lot. When something is overbought, but it's over moving averages like the 50, that doesn't mean to short it. It means to look for bullish reversal patterns. If it's overbought in a downtrend, not now. I'm talking about in here. Overbought in a downtrend. That's a whole different situation. Then you look for reversal patterns on the downside, what you got. So just showing you there are different ways to play this. So overbought using, let's say, the 50 moving average on a 4 hour. So overbought in a downtrend. You look for reversal patterns. So overbought in an uptrend, you can wait for it to work off the overbought and look for bullish reversal patterns. So that's how I use the MACD. Right now, I was just looking at the ES working off that 15-minute. Guess what? It is. Yeah. So, like I said, it's the NASDAQ now that has that real nice trend line, but it still might be too early. So, usually when I see that, and in Chart Patterns Mastery, I think you heard my little comment about Microsoft having a bear flag. When this rallied, so I'm always looking at correlations, especially on expiration day. When I watch NASDAQ do this, not here, I'm talking about here. And like I said, if I see the advanced declines lousy, the first thing I do if I'm looking for reversal patterns and I don't want to trade indexes, I'm looking at what stocks refuse to reclaim their highs. So you see the new high, what didn't reclaim its high? That. Now, not by a lot, but this didn't even come close. So that's the 1131. But when I looked ultra short term, that's what I saw. That this would rally back up to here, and this refused to rally. The scary thing in this market is usually when it has this pattern, it goes up, not down. But I think you see this refused to rally when the NASDAQ had rallied. So, just that's what I'm doing. And besides that, to me, I'm watching that bond market and I'm watching that it refuses to rally. And here we go again with the MACD. Look at a 4 hour and how overbought it got. Yeah, I know that's a little twerking going on there. But the point is the probability of making money when it's too overbought isn't real high. I wasn't going to touch it into the CPI. But here's an overbought attempting to go to zero while this state is a bull flag. Yeah, that's what I mean by working off an overbought well. And keep in mind, overbought over things. So this overbought was a lot more reliable right here, then this overbought because this was under everything. So that's the way I do it. So did I short? We're already in Microsoft and got in too early, but that's your Brecher ledge, sure, right there. The more points of contact. There is one problem with that, Aaron. It's not a massive sell-off followed by a Brecher ledge. A Brecher ledge is after a big sell-off, you get that horizontal consolidation. Now, in hindsight, yeah, it worked, but it wasn't as dramatic a prior move down. But yeah, I mean, I see exactly what you're talking about. So let me see if I can find another Brecher ledge. A Brecher ledge is after a big sell-off, you get a bear flag with a horizontal line like this. The problem is that's just a tiny sell-off, but it's a point, and a point is a point. So let's see if there are any others that have Brecher ledges. It's a good question. Let's see. Remember, we're looking at the NASDAQ with that trend line. See the trend line? And if I see that and I want to anticipate, then what I'm going to do is probably find the stocks that already were going down. That way, if this goes up, they're less likely to go up. That's the way I look at it. Like I said, Microsoft was just a tiny Brecher ledge, so you had to be real careful. It only projected about a point. So let's see if there are other Brecher ledges. Well, I'll show you one from yesterday. You'll like this one, Aaron. There's your Brecher ledge. Look at that. There you go. I actually have, now that's only 20 cents. I'm just showing you a perfect example of a Brecher ledge. The tighter the pattern, the more likely it's going to work. Now, sure, that's only like 20 cents. The point is, look at that big old downtrend and then the consolidation. So you short on the break. Look at that. You never would have bought it back till probably here. It's not a big move. That's why I didn't play it. But yeah, that's a good point. I can try to find you more. So NVIDIA, let's see. Yeah, the only problem with the NVIDIAs is if that's not a Brecher ledge, just to let you know. It needs to be more horizontal. I mean, I'm going to the tightest time frame I can. There are your bull flags. There's a bull flag, but you had to just stay in overnight. But there are some bull flags, all about selling off to support, especially that one. Now, yeah, sort of. I mean, sort of. I totally see what you're seeing, especially if the NASDAQ breaks. This will probably go with it. The problem with the NVIDIA is you could drive a truck through the bid and ask. So it's really tough to put in a stop. The second thing is the options are in the sky. So it's really hard to buy the 470 puts when they're 4 points out of the money. This has to go $3 down just to break even. That's why we do butterflies all the time. The problem is it hasn't broken yet. The overall NASDAQ close. But yeah, you're probably right. But how are you going to play it? Really scary to sell a 475 call naked just in case some news comes out. And it's hard to sell this spread for $1 when you're risking $4 if you're wrong. And the only reason I'm saying if you're wrong is because this has been in such a big uptrend. If it had that little Brecher ledge after it broke down, that's a whole different situation. But right now, it's been in a big old uptrend, so I get scared doing something like that. I'd be a lot more aggressive if I saw that thing you're talking about, if I saw this. So like the little ledge will break a bigger ledge, and then I'd get aggressive, no doubt about it. Yeah. These are all the correct things you're looking at. All the correct things you're looking at. What are you looking at? That this had the trend line and that these started going down. We were saying it was doing the opposite before. Then all of a sudden, right here, they all started going down except Tesla. Tesla's sort of its own kind of thing. And like I said, Microsoft didn't have the dramatic move yet. And that's because this is such a tiny projection. In fact, it almost did exactly the projection, a point. Now, if this thing was like 4 points and did this, I'd be all over being more aggressive on other trades in there. So right now, like I said, that's not a biggie. That was the problem with it. How about some of the other ones you're talking about? Well, Nvidia, that's at least a biggie. That's at least 3 or 4 points. The problem with that is, like I said, I'm still nervous about the overall uptrend. When I'm nervous about it, I'll just trade the indexes. Yeah, that SPX, this is what I was telling you. It just went down 5 points, and this is only 40 cents in the money. It's still going to be a good trade, but I'm just telling you that it's not, you just don't want to pay 250 for a 10-point wide. Yeah, it's probably up money. Let's see. Yeah, 215. The problem is this was up 8 and it was $1.90. That's what I'm telling you. It's a terrible risk reward at this time of day to pay $1.90 for that. They just don't work the way you think they do. Now, don't get me wrong. If this is up 6 and everything is the same, like advanced decline and all that, with like with 50 minutes left, in 15 minutes, I'll do a 10-point wide, not a 5. Then I'll pay like $2, but not this early in the day. Now, it looks like you're going to be right in NVIDIA. Now, in answer your question, by the way, when you're looking at that, and here you go. Here's another one for you. You just asked about those kind of Brecher ledges. There's one right there, right in front of you. I don't know why my arrow's doing that. Usually when it does that, it means it's about to say performance problem detected. So just give me a second. Can you hear it? Usually when my arrow does this, sorry, I hope I'm not trying to be like anything like double entendre. The arrow is all screwed up. So let me exit one. There you go. It just deleted one instance of thinker swim. There. So you're right. Broadcom, Brecher ledge. Like I said, though, that's another one you could drive a truck through. But if you see a Brecher ledge in NVIDIA, Broadcom, the biggies, yeah, you're probably going to see the NASDAQ go down. And the beauty is the NASDAQ broke at that trend line and then had a consolidation. So there was time if you're a NASDAQ trader. And by the way, chart patterns mastery. I still have that spread on that was a little far away, and it's not as far away anymore. Here's another one I did too early, and now you're unchanged in it. So I'm just telling you, Aaron, what you saw in there, there you go. If you're seeing all those Brecher ledges, then you know that the Qs are probably going down. But like I said, the big problem with these, they're all in a big old bull market. But there's your ledge. But in answer to your question also, these ledges work a lot better if there's no support underneath. You see all the support. Is it really worth trading an $900 stock for a point? Now, if I saw that on a 15-minute and had no support, that's a whole, that would be different. But I think you see that reversal candle to me as support. So that's the risk reward doesn't seem there. So that's one thing. ES, let's look at that. Do we have that head and shoulders? Now, let me just tell you, 80% of patterns are consolidation patterns, not reversal patterns. I have a lot easier time looking not for the head and shoulders, but the consolidation within it. So I like doing that more. So but it's just really hard when you're at all that support. Look at all that support. So sure, if it gets under there, well, guess what? Then you have this support. In fact, let me just do this for you because I'm doing this all the time in the chart patterns mastery. Where are the support zones? There it is. All I'm doing is taking prior tops. So sure, that could go down here. It's just going to be tough to get under here. And then what happens? Then you have that support zone. The thing is, though, that would get you to 4,500. So that's definitely possible later. No doubt about it. Definitely possible. First stop there. But what's the moral of the story? The 15-minute worked off the oversold really crappy. So if you want, I'll share an image of this. There. Let me share an image. I hope this helps. There, let me put this in. Nah, it won't work in the YouTube room. I wish it would. But that's your support. Now, what's that mean to me? What that means to me that if I'm playing it to the downside earlier today, you see where I'm getting out. And that's what we did. Did I get out at the exact bottom? No. No. But as you see where it could stop. How about the NASDAQ? Now, you just showed Aaron, and a number of you that the NASDAQ stocks had more Brecher ledges. So where's the NASDAQ support? Now, that's a little different. There's your support in the NASDAQ. That's a lot lower. That's about 50 points. So let me share that with you. Yep, like I said, definitely looks the way you're talking about. I'm just talking about I like the consolidation within it. So when you saw that kind of topping pattern, I was looking at the NASDAQ topping pattern and that trend line. And then within that trend line, you were seeing all those things you pointed out, whether it was Broadcom, Nvidia, and the Nvidia is exciting because of that. I just don't know if it's going to get all the way there. And like I said, really hard to buy puts because they're so expensive. And what I mean by expensive, expensive relative to movement. You better be dead right. So, but yeah, those are great calls on your part or puts. Like I said, the biggest problem for the whole market, if you want to be bearish, is all the support zones. You just got to respect those support zones. Well, even if things look bad, look what happened. Yep, Nvidia stopped at the support. It's amazing. It's like if you think algorithms are like 50 different factors, no, most algorithms are idiotic. So all they are is like they get under a moving average. They hit support. I mean, that's literally all they are. And I'm trying to get in the head every day of what the algorithms are looking at. And one of them is the more points of contact, the more that support. Doesn't mean it's going to hold like you saw the NASDAQ, but that's what I look at. And like I said, if I'm going to pick something though, and I'll show you both of them, I don't like that the ES is selling off, the advanced declines going up, but it's still down 1,500. So, definitely we called the NASDAQ. And if I'm going to pick either of these, I'm going to pick the one that has the least support, which is the NASDAQ. And just to let you know, in the chart patterns mastery, I'm off the schneid in the Microsoft, if you know what I mean. That thing is almost a dollar. Almost a dollar. So we made the money in the SPX. We got stopped out on a tiny PXD, and now you're up in Microsoft. So, just keep that in mind. It's still out of the money, almost out of the money. Now's not it. Just keep that in mind. So just keep that in mind. That what we were in is 90 cents. So you're up about 20% now. I know you didn't think that was possible. So, like I said, where's the support in the NASDAQ? The support in the NASDAQ is a lot lower. Right in here. NASDAQ wise. There. But I'm going to get out here. So just if you. There. I had to post for you so you know what I'm doing. maybe early, but I'm out. So now that one we're up 50%. That was zero. So now we're up in the SPX and we're up in Microsoft, just to let you know. And the biggest key was this right here. That when the NASDAQ had this, and I'll detach them, when the NASDAQ had this on the right and had that trend line, like I mentioned about the Brecher ledge. And Aaron, how did that Brecher ledge end up working? Yeah, pretty well. Like I said, the problem is right there. So if that doesn't hold, yeah, all heck will break loose. And don't get me wrong, if NASDAQ breaks to here, then Microsoft sure could go all the way into here. So don't think I'm not going to get back in. That's a lot of double negatives for you. Bonds on the low almost. That's not going to help this sentiment either. Yeah, I just posted the NASDAQ support. I just put an image up there for you. It's actually up there. I just posted the image. So just to let you know. But I do think that if the NASDAQ goes to the lower support, is all posted, then Microsoft could break. No doubt about it. This is all about working off an overbought or oversold and then looking for what refused to go up in the first place. So it's really cool when we call it in. Not only did I call it, you called it. And but you see what happened. It's amazing. I'm telling you, there are these algorithms gauging support and resistance. Why on earth would this rally? Yeah, rally because of this zone. I mean, that's why if you bought the 890 puts, you'd be down money, even though you were right. How about NVIDIA? Well, the verdict's still out on that of whether that's going to break. I would have liked to see this on the upper left sell off and this go with it. Instead, it refused to go lower. But yeah, I see exactly what you're talking about. It'll probably happen when I'm not on. And you see why it stopped. It's just amazing how that works. So just to let you know, Chart Patterns Master, I hope you're watching. We're out of that thing. So it's 20. Yeah, my correction, 30%. But just keep in mind, my initiation was not the best. It's a better buy to buy a put here than buy a put up here where you're like wishing. So when Aaron mentioned that, well, that was you, right, Aaron? Yeah. No. Who mentioned Microsoft as a ledge? So yeah. So you see a mile away that it was a better short in this zone than here. Because here you didn't know how high it was going to go. And in answer to your question about the rebalancing, it's a great question because you sure haven't factored them in because they've all gone straight up. The announcement of how much the rebalance is after the close today. So keep your eye out on that. So everybody take care. I hope you enjoyed this. I thought that was a really good session to watch all these chart patterns work and the MACD. So take care.